Hey guys, what's up? It's Jason. Welcome back to my channel. Today we're talking about dividends. So you might be asking, Jason, why do I care about dividends? Why are you so boring? When does this video end? Those are all fair questions, but I advise you to watch this video because dividends are super important. And in this video, I'm going to explain how dividends can make you financially free. Dividends are what companies pay back to you, the shareholder, for owning stock in their company. When you purchase stock of a company that offers a dividend, you will get a percentage return on your money. For example, the company 3M currently is paying a 3.98% dividend yield. So for every share you purchase of that company, you're going to make a 3.98% return annually on your investment. So currently, if you were to buy the stock at $146 is what it's currently at, you would make a percentage return of 3.98%, which comes out to $5.53 a year for owning one stock. Now, there are a lot of companies that offer dividends. However, you need to be careful because if you go and try to search for a company that just offers the highest dividend, well, that can cause issues. If you're just chasing companies that offer the highest dividend, most of the time it actually hurts the company because they're paying out so much of their profits to dividends, and it can cause the price of the company to collapse. Now, if it collapses, yeah, you're still getting the dividend. However, your capital investment that you initially put in is falling, so the dividend you're making isn't counteracting the amount of money you're losing. So be careful when you're buying dividends with companies that offer high yields. I would go for a more conservative, anywhere from 2 to 4% yield. And searching for companies and doing all of your due diligence and looking at all their income statements and their dividend growth over time, it can take up a lot of time. And if you're not super sophisticated in all of that fundamental analysis, I would recommend looking more into index funds that offer a dividend yield as well. What's nice about the index funds is that they do all the heavy lifting for you. So they go out and they find all the best companies in different sectors and they mash them all together so it's well diversified and it's a stable investment. So if one industry isn't doing well, the other one is picking up, and your dividend is safe with index funds as well. Even though most indexes are relatively safe, I would still do my research on that index before you buy it, because you should always be doing due diligence before you buy something. So I would go look at their dividend growth, make sure their dividends have grown every year. I would look at what industries they're heavier in. Usually an index will be at least 30% in a specific sector and then diversify out. So I would look at which industries they are invested in. And also I would go on a website called Seeking Alpha. They have a lot of great articles that do a lot of deep dive into these indexes, and they are good for doing your due diligence. Just because I think indexes that pay dividends are great, that does not mean I'm discounting owning individual stocks as well. There are really good benefits to owning individual stocks that pay dividends as well, as sometimes owning stocks, the capital growth can be a lot higher than owning indexes. For example, if you look at Starbucks, Starbucks has grown exponentially and pays a pretty good dividend. So there's nothing wrong with owning individual stocks and owning indexes as well. It's a good way to diversify even more. So now you might be wondering, well, okay, now I understand dividends, so when the heck do I get paid? So usually dividends, stocks or indexes, they usually pay out quarterly. So every 3 months you will get a dividend into your portfolio. Now, I would recommend not taking that income out in your pocket. I would recommend reinvesting it back in. I'm going to talk more about that at the end of the video, so keep watching. But you should expect that most dividends are going to be paid out quarterly. And again, the main thing you should be looking for in these indexes and stocks are, have they gone up and held their value and gone up consistently over time? Have they consistently raised their dividend every year? And if the answer to those two questions are yes, then I would recommend diving deeper into those stocks or indexes and really doing some due diligence on those, because those may be some really great buys to hold for the long term. So you still might be wondering, well, okay, are dividends really that cool? Like, I get it, yeah, they pay you quarterly, blah, 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 whatever, but look, They are important, and I would definitely not look over them. If you want to be able to live off the interest that your money is making you while you sleep, then I would definitely recommend starting a dividend portfolio today. Being able to live off the interest and never touching your principal is huge, because when you do eventually pass away, unfortunately, that's life and it happens, you can will that portfolio off to your children and they can live off the interest and not touch the principal, and it can keep growing and growing, and they can pass it off to their children, and that's how you start legacy wealth. So I briefly talked about the DRIP method earlier in the video, and I'm going to dive deeper into it now. So what the DRIP method is every quarter or monthly when you get paid a dividend, you reinvest it automatically back into buying more of that stock or of that index. Now what that does is it doesn't allow you to take that income out in your pocket. However, buying more shares instead of taking it out is huge. And I'm going to throw up a picture here of the S&P 500, for example. Now the bottom line is if you never reinvested the dividends and took them out. And the top line is if you did reinvest the dividends. And the difference is over $2 million. It's crazy. So this is why I strongly recommend using the DRIP method until your portfolio is large enough to where you feel comfortable that you can live off the dividends that your portfolio is producing. Well, that's it for today's video about dividends. I hoped you learned something, and I hoped it sparked some interest in you to go learn more about dividends. And until next time, have a great day.